Software stocks have outperformed semis over the past 6 months by almost 30%. But can that momentum continue into 2025? Let's ask Ashley MacNeill, head of equity capital markets at Vista Equity Partners, back with us at Post 9. Nice to see you again.
You too.
That outperformance has been pretty unbelievable. What do you attribute that to?
I think it's a few things, but I really do think it's on the back of this quarter's earnings. We saw some real momentum in software driven by consistency in the revenues, disclosure around CapEx and generative AI, and most importantly, that I think got a lot of excitement going was the contribution of generative AI to the top line revenue growth as well as margin efficiencies.
And that you think has legs to it into the new year? How do you assess it after what's been an incredible run?
Look, I think there's been a fair amount of pull forward in valuation. But if you look at all software multiples, right now we're trading around the 10-year average. So it feels that there is sustainability going into 25. And I do think 25 is set up to be a great year for software.
Yeah, I mean, you know, for what you guys, this is your wheelhouse. For those who don't know, I mean, the firm specializes in software. I mean, it's a great time to be a seller, theoretically, because valuations have gone up so much. What you guys have done so well, what Robert Smith has made his living, literally and figuratively on, is buying low and selling high. We've seen the value of the portfolio companies go theoretically way up. I mean, you guys don't disclose that, but I think we can make that assumption. What now, though, as we look into the deal-making crystal ball into 25, what do you see?
Look, I think 2025, and you've heard me say this before, is going to be a very robust year for deal making. I think it's going to be a robust year for IPOs, but also for M&A and for private placements. I think it's time that people start deploying capital. I think we've got, over $4 trillion in the private market of dry powder. We've got $6 trillion sitting in money markets on the public side. So I think it's going to be a really robust year, and we're really excited. And software is starting to show some real proof points for being investable, particularly as you think about generative AI.
Have you changed the way you're looking at capital markets prospects from the result of the election? Have the goalposts on that regard moved in your own mind?
I think there's been some pull forward of valuation and expectations, and I still think that we're very much in a wait-and-see mood post the election. And so I think that there's still going to be a lot of things that need to play out as we understand how people and this administration prioritize things and what things they actually decide to pursue with vigor versus maybe address in later years.
The idea of more IPOs, a more robust capital market can obviously lead to that.
Yeah.
But pushing against that is the fact that companies are staying private longer, especially within the technology space. Why? Well, at least in one regard, because the access to capital is better than it's ever been. That's why every private equity firm is tripping over themselves to get into private credit. But the benefit is to the smaller businesses that have access to capital. They don't need the public markets. When does that paradigm change?
So I think that paradigm is starting to change. I just went through the numbers of the differential between what's available dry powder-wise on the private side versus public side. But I think the big differential will also be the duration mismatch you've seen with companies, particularly in technology. So as technology companies evolve their companies and their business models and those durations start to match public investor expectations, that's when you see the IPO market really open up.
You have to have, in your mind, if you're a software company, either a Gen AI type play or something related to data center? I mean, we just did an interview last week out in San Francisco with a portfolio company that really is taking advantage of the big play in investing in data center.
Yeah, LogicMonitor, it's at the epicenter of generative AI ecosystem, and it is from a software perspective, kind of at the forefront of the generative AI innovation. I think that, look, software is the ultimate beneficiary of generative AI, and so you need to be able to articulate to investors what your plan is for embracing this technology, and then find real monetizable data points. That is what is going to get the generative AI narrative interesting. And we're still waiting to see a standard metric for this generative AI for software. And once we start to see that, then I think it'll be less about what's your Gen AI narrative and more what are your proof points? What is your monetizable attribute for this technology?
What do you think?